Among the diverse array of investment vehicles, ETFs stand to be an efficient and popular way of creating a well-structured and diversified portfolio to create wealth over time. In this video, we'll seek to identify the best ETFs that you should be looking out for. Drawing upon rigorous analysis, market insights, and performance metrics, we'll unveil a selection of ETFs that exhibit the potential to drive long-term wealth creation and asset appreciation. I'm sure you've wondered what ETFs are best to include in your plan. Obviously, the choice varies upon your investment goals. However, there are many different types that you can choose from. Remember, these are not investment tips, just simply examples. These are the ETFs you should be watching out for. 1. Broad market ETFs. These track broad market indices, such as the S&P 500. They therefore give exposure to a wide range of stocks across different sectors and industries. 2. Stock ETFs. Stock ETFs track the performance of a specific stock index or group of stocks. They provide exposure to a wide range of publicly traded companies. Now at number 3, let's move on to sector ETFs. These track specific sectors of the market and allow you to gain exposure to specific areas. At 4, we have international ETFs. International ETFs are different, as they allow you to gain exposure to foreign markets. At 5, we have fixed income ETFs. Fixed income ETFs invest primarily in bonds, providing a regular income stream to invest. 6, we have commodity ETFs. Commodity ETFs follow the price performance of commodities such as gold, oil, silver, and many more. They can invest directly in the physical asset or through futures. Number 7 is currency ETFs. Currency ETFs provide exposure to currency exchange rates between different currencies. They can be used to speculate on currency movements or as a hedge. At 8, we have real estate ETFs. Real estate ETFs invest in real estate securities, such as shares of real estate companies or REITs, real estate investment trusts, providing exposure to the real estate sector. And last at number 9, we have bond ETFs. Finally, bond ETFs are usually more stable than stock ETFs, but they also tend to have lower yields. When building your plan, it's important that you diversify amongst different sectors and asset classes. This will help you reduce your overall risk and increase your chances of long-term success. And make sure you download the XTB app in the App Store to get started investing in ETFs with XTB's investment plans.